Hello, everyone. Brad here from Income Architects, and I have Troy Cates with us live to answer some questions tonight. And there's some rumors going out there, and we just talked about some of those rumors. And I'm just going to go ahead and jump right in and start asking some questions, and then we'll try to bring up some questions from the audience tonight. So the first question we have is: you have a couple funds that are still in review process, and technically you could go live, but are you holding off, or are you going to move forward without the SEC being on furlough?
Well, thanks for having me today, Brad. Happy to be here and chat and answer some questions. So yes, we do have 6 funds in registration right now. One of them, our Ethereum, would have been effective this past week, but we are waiting for the government to reopen so the SEC can get back to work, so we could eventually receive any comments that they might have on our initial filing, and then go from there. So we'd love to get these products out sooner than later, and we have kind of our original plan was through year end to try to get these 6 products out if we could. But we'll wait till everybody gets back to work and catches up on what they need to, and then we'll go from there.
Sounds good. I heard that rumor, and I confirmed with you earlier, but I know that other people are probably wondering that also. The international funds came up. You actually had your first distribution on that already. How's that one working out for you?
This one's been great. We saw a real demand for international exposure, and we wanted to partner with one of the bigger index providers that is probably one of the biggest in the international space, which is being MSCI. So we partnered with them on getting access to their index, getting access to their index options, which get that 1256 treatment. And we really wanted to build out that because, as you know, Brad, the international markets have done so well this past year. And yes, for years they lagged, but we wanted to just, again, as we kind of look at what NEOS is and what we do, we really look at ourselves as a solutions provider. And obviously in the option derivative space and in the income space. And we just wanted to offer more solutions. So we have our equity high incomes, which now includes international, obviously S&P, NASDAQ, Russell. We have our fixed income products. We have our alts with Bitcoin, gold, real estate, and we have our hedge products with QQQH and SPYH. So we really, as we look at getting more products out, we just want to continue slicing up the pie. And when you think about income, when you think about possibly lowering your volatility, possibly hedging in certain portfolios, think of NEOS, and maybe we have a solution that fits your portfolio.
Sure. And Mary has been a longtime subscriber, so I'm just going to go ahead and bring her up. Your international fund is NIHI, is that correct?
Correct. NIHI.
Good. She asked, she's been around for a while, and I'm sure she appreciates getting. You got some boosted funds that I know that you actually gave a percentage of targeted editions. Was there a targeted in your Ethereum, what you're going to try to distribute, or is that still out there that can't be answered yet?
It can't be answered. It's not in the prospectus. We did put it in the prospectus for the boosted series, but we did not for Ethereum. So I can't really say much until we actually get it out live. So hopefully the government could get back to work soon and everybody could get back to their jobs, and we can move forward with launching more funds for everyone.
And if anybody's watching this not live, I will put the prospectus down in the description so you can go read them yourself to see if it's right for you. Again, this is not financial advice or any other advice. We're just trying to answer some questions of what we can answer, at least today. You also have a NEOS long and short equity income coming out, and that one's interesting. I've read the prospectus. Can you try to explain to me how you're going to pick these stocks or equities?
Sure. Yeah, sure. So it is a quantitative research model that picks from the S&P 500 universe, picks 30 long names, and those long names, 30 or so long names. Those long names will try to hold for more than a year to get long-term cap treatment if we do wind up selling them. The short names are going to be rolled more frequently, anywhere from a week to a month of rolling in and out of those short names to take advantage of any weakness in those equity names. And then we'll have we'll be selling S&P 500 put spreads on top of that to bring in additional income. So it's a combination of, a long short equity book, very much like people might think of like a hedge fund, and then having the option overlay on top of it, and then distributing that income on a monthly basis.
So I heard puts on it is going to be on the SPX.
Correct.
Okay. All right. And can you describe a put spread for everybody that may or may not know what that is?
Sure. So in this scenario, what we were just describing, we're going to be selling put spreads. So this is where you're selling a put, let's just say 5% out of the money, and then you're buying a long put to close out that risk, say 8% out of the money. So the spread is 3%, the difference between the 5% out and the 3% out. So you're hedging yourself within that actual position. You're not hedging the portfolio or anything, but you're hedging that position. If we were just selling puts, you're selling naked puts. But with the put spread, when you're selling the put spread, you're still creating a net credit that you get to keep if the put spread expires worthless, if you hold it till expiration, or if it decays while you hold it before you close it out. The other side of it would be buying a long put spread. And this is similar to, say, one of our hedge products like QQQH or SPYH. In QQQH, for example, we're selling a call to bring in income, and then we're using part of that income to pay for a long put spread because we want protection. So in that scenario, we might buy a put, say 5% out of the money, and we might sell away that insurance. Instead of having insurance down to 0 in the NASDAQ 100, we might sell that insurance away down 15% out of the money. So it gives you a measure of downside protection. So it's not trying to hedge you out to 0 or give you a defined outcome, but it's really looking to give you a smoother profile, return profile, still provide monthly income, but give you that measure of downside protection. So the long put spread's more of a hedge, and the short put spread is more of trying to collect some premium on an equity market that might move higher.
Troy, I see a couple comments, and I just want to bring these up to you real quick so you can try to address these, because I've heard these comments elsewhere, and so they're really actually pretty good. It says NEOS Weekly, and I've heard some comments about NEOS Weekly, and the people have been asking for NEOS to do more of a spread out distribution instead of just on one date. Any thoughts or comments that you might want to make to that?
Yeah, so we don't have the final calendar set for 26 yet, but what we're looking at is, since we've grown now, we're 13 ETFs. We have 6 more in registration, so hopefully that's 19, soon to be more going into Q1. And that distribution date that we have right now is, yes, it's getting to be a busy time of the month for the operations team, trying to go through all the distributions and then making sure we have everything correct after any kind of flows come in that day. And so what we've looked at is possibly exactly doing that, breaking up, for example, week 1, this suite, week 2, this week 3, week 4. So we're not looking to change from monthly distributions for our individual ETFs, but if we break up each suite, we're looking to do that possibly. Just it'll take off a lot of the work on that one day, having so many funds to do the distribution, if you can kind of spread them out a little.
Yeah, I see that a couple times here. Plans on staggering distribution dates and funds and stuff like that. And I've heard that in the past. So I think the major audience would probably appreciate at least a little bit of staggerness, right? This one, I don't know. Troy, trying to guarantee 5% on Cashy. Love to park cash there. There isn't a guarantee, is there? Because there
no guarantees here. Can't guarantee. It's not a money market. But we do pay monthly distributions for CSHI, like all of our funds. And this one is, holding an underlying basket of 1 to 3 month T-bills. And then the idea behind our fixed income suite is, you'll notice all the names are enhanced. So this is our enhanced income 1 to 3 month T-bill. We have our enhanced income 20-year plus. So if you think about how we look at it, we're trying to enhance the income over whatever you're receiving in the 1 to 3 month T-bill. And in those products, we're selling S&P 500 index put spreads deep out of the money rolling those on a weekly basis, durations 2 weeks, but rolling on a weekly basis to bring in income. And, similar to we were talking earlier, your risk is on the spread between that short put and the long put. And that's usually in the range of 3 to 5%, on average around 4% across all the 4 put spreads in CSHI. And the nice part about it is, since we're rolling on a weekly basis, we could move as S&P 500 spot moves. So if the market sells off, you're rolling that week, and you could roll further out and maybe take advantage if volatility, gets lifted a little from that sell-off. So it's been a great product. It's crossed this 3-year track record back in August, and we're really happy with it. But people ask, like, how are rates going to affect this? Like, tomorrow we have another Fed meeting. Kind of consensus looks like it's going to be 25 basis points. We'll see tomorrow afternoon what that looks like. And then we have one more in December before year end. And as rates get cut, the underlying, which is providing most of that distribution, will come down accordingly. But you could still get that supplemental income from that option premium that is on top of the 1 to 3 month T-bill. So I almost look at it as rates come in, CSHI, in my opinion, might look a little bit more attractive, than when the 1 to 3 month T-bill was at 5%. Now it's just below 4%. And if that continues to come in, that added income on top of it, the goal is 1 to 1.5%. That added 1 to 1.5% might be more attractive to people looking to kind of park cash.
Here's one that I'm going to go ahead and read to you. Does NEOS offer a newsletter sign up to keep investors abreast of what's happening in new products? I know that you do have a website, and I noticed today, and this is that you actually do a monthly write-up about the market and different things on it. But is that in a newsletter?
It's not in a newsletter. We can't email that out, but yes, you can go to our website. We do have a lot of resources on there, videos on there, and of course the monthly write-up on just what the markets did the past month and so forth. And of course, if you follow us on X, we try to put some updates where we can on different products, different awards, different things like that we could put out there, but we don't have an actual newsletter to keep people up on things.
Okay. I saw that, and I didn't know that for myself. I was like, man, maybe I'm missing a newsletter. Okay. Let's go through some of these. They've been QQQI, best funds. You're getting a lot of compliments. I don't know about all that. I'm just kidding. Weekly, there you go. Enjoy watching Troy and his partner. Informational videos. I'm just going to keep you up to breast because if there's anything here that you see that we'll ask. Will there be a BTCI/Hedge ETF?
We've talked about it. We don't have one in registration, but it's not off the table. We've definitely looked at it. We'll see if there's a real demand for it. Obviously, asking here is definitely going to go down in the notes to talk to our investment team and my partners about. But it's it's something we've definitely looked at to have a hedged product. We already have the S&P 500 hedge and SPYH and the NASDAQ 100 and QQQH. So we're always looking at what might be another product that, given how volatile things have been lately, especially, the sell-off we saw recently in Bitcoin, a little bit that has come back in off of all-time highs, might be another one we could look at.
Yeah, I saw that, and I said, that's a good thought, right? Now develop funds of funds, a NEOS suite. I don't know if that's something. I would snap up 15%, right? So funds of funds, would that be something that you would think about offering?
We've talked about it. We've actually recently had more requests about it, about doing a fund of funds, and whether it's like, as this person described, a target 15% or some kind of target duration, or some kind of target exposure, whether you wanted to be more aggressive and have a higher distribution target. So maybe it's weighted more towards a BTCI or QQQI in that range. So it's definitely been top of mind. with the team, we've always looked at it as if we offer all these solutions that, you, the end investor, can pick and choose which ones you want to kind of dive into. If you want equity exposure, you can get that through SPYI or QQQI. But if you want also to have that Bitcoin or gold exposure, you could grab that as well in your own specific weights. But it's definitely something we've talked about, and definitely would consider.
All right, let's get to some of these questions and we'll just knock these out. How about a NEOS silver fund?
Yeah, we've been talking about that one too. Nothing in registration. But as you think about, again, going back to us being a solutions provider, that would kind of slide right into the alts part of it, and just offering another solution for people to think about and to potentially invest in if it provided income that they were looking for.
I know that you don't do any zero DTE funds. Have you thought about that?
We thought about it.
QQQ.
When we were building these products, we always look at every type of option structure. We do everything here, as you know, Brad, in-house, from research, thinking about the option strategies, developing what it looks like, testing them. Then all the trading happens here. Everything is we don't sub-advise anything out. So it's really important for us to think about looking at every product, especially as the option market expands. So going from monthlies to weeklies to now zero DTE, it's really important for us. So we've looked at it for us for NASDAQ, and I think they had up there S&P 500 and Russell. It still makes sense for us to roll on the roll schedule we have, because we notice we can capture the most premium during that time frame in the most tax efficient manner.
Sure. Just going to read some of these off to you. Any appetite for mildly risky target 8% product? Well, that's not really risky for NEOS. You do have a bunch of 8% products.
No, I'm thinking they're thinking like a target date fund or something like that, or a defined outcome type product. So we have not built any defined outcome or target date type stuff. Right now we're still working through all the, as you could see, all the major indexes, all the major, durations with 1 to 3 month T-bill and 20-year plus, but there's a lot of duration left in there for if we want to continue to grow that space. And there's a bunch of alts, as we've been describing, that we look to get out. First on the list, obviously, is Ethereum, to try to get that one out.
Sure. Yeah, I mean, here's another one for you. NEOS Solana. I know there's a new Solana fund coming out from somebody else. Is there a Solana in the future from NEOS?
Yeah, we're looking at everything, and it really comes down to, when we're trying to build these products, it's not so much trying to be first to market, it's trying to come out for us at the right time with the right structure. And if the liquidity is not there in the options market, or there's not, we have very deep relationships with a number of the big market makers on the street, including our lead market maker, our prime broker, and trying to make sure that liquidity is there, and that not only can we get this product out, but can we scale it? And if the scale's not there in some of these things, we're just going to wait a little longer, or we'll keep watching it. So as these new type of products come out, we're definitely watching these closely.
Wow, I'm going to go ahead and ask this question, but I don't know. What competitor do you respect the most?
Listen, there's a lot of competitors out there that are doing things great. A lot of the bigger banks, JP Morgan has the largest products out there, obviously, with Jet being JetQ. They've built a great business around that. We do things differently, and we think our way is a little better, but we certainly respect them and what they're doing and what they've built. Goldman, we know a number of people over there have been building that business. So we, while the ETF business is large, there's a lot of ETFs coming out, especially you feel like a new one's coming out every day. We all go to the same conferences where we all somehow know each other. And so, overall, there's, good respect across the industry to, watch this industry grow. We're always rooting for people to continue the ETF growth expansion that we've seen over the past couple of years.
That's right. And you probably guys all have the same CBOE representative that I had dinner with. So
Yeah.
it's interesting how that all, it's a small family. Do the founders and employees own shares of NEOS funds?
So yes, so I own shares in each of the 13 NEOS ETFs, and I know Garrett does as well, and the other partners, and I know a number of employees definitely do own, maybe not all of the ETFs, but I know they own the ones that fit their asset allocation most appropriately. But I personally own all 13.
I mean, you just don't have QQQI and BTCI and do it that way? I mean,
Yeah.
I'm sorry. I made a video like that, and people were like, really? And I was like, well, it's actually probably not that bad of a deal.
Yeah.
Just a little more feedback for you is NEOS Semiconductor Fund would be awesome. That was just a little feedback, not any comment, or something with BDCs. And I always wondered about BDCs and doing something with BDCs myself. I personally hold a few BDCs. All right, but that might be something interesting. All right. Oh gosh. Will there be an alti salty combo fun having, you don't even have to answer that one.
Yeah.
Right. Probably not from NEOS. I don't believe. Right. I don't think that's your I don't think that's in talking about that. What do you try to come to market with as an overall product for people that maybe not know you as well?
I think where we started with NEOS was SPYI, BNDI, and CSHI. And we really wanted something in your equity bucket, in your fixed income bucket with BNDI for aggregate core bond exposure, and then your, call it ultra short duration or cash type bucket with CSHI. And that's the basis of where we started. And we wanted to start, say, with the S&P 500 because it's a broad-based index. We're not trying to do anything different than track those 500 plus names in the underlying equity portfolio. So we wanted to go to places where people can say, yes, I understand the S&P 500. I'm invested in it, or I have been invested in it. And I understand that this is a way to earn income off of the volatility around the S&P 500 through the options market. So we really wanted to start there, and we kind of continued that expansion, thinking about going around our lineup because our next product after that was QQQI. And we really wanted to get that NASDAQ fund out. And that's quickly grown over the past, year and a half plus to be now our largest ETF. And so we're really excited about, partnering with, large index providers like S&P, NASDAQ, Russell, MSCI, and building out, option solutions around those larger indexes. Even with IYRI, we track the Dow Jones U.S. Real Estate Capped Index, and that's an S&P 500 or an S&P product. And so we're excited about being able to get access to those underlying indexes, track them, and then just bring in our expertise, which is really around the option portfolio and managing options around those underlying reference assets.
I know one time that we talked that you do back testing, and you actually had a third party doing back testing. Is all your products back tested either in-house or externally for how they actually operate?
Yes. So we use a number of systems to do all testing. And yes, we use a couple of different third-party providers to do some of that testing, just because when you're looking at options, think about how vast the options market is. You can look at one expiration, and then there's so many different strikes, and you have to think about, having all that data in one place. And so a lot of these third-party providers provide all that data and can do some of the testing according to your methodology. Some of them actually have front-end systems that you have access to, and you could put in and do your own testing through. And then of course we do it, before those systems were even out, we had to buy that data and build out our own, models internally to do the testing. So yes, all of our products we test. We spend time kind of looking through what might it look like if we roll weekly or monthly, or have a duration that goes out 3 months instead of 2 months, or instead of 1 month, but still roll in a more consistent manner. So we try all these different iterations of, trying to get to the same target and we look at, this is the product we want to bring out. We want to bring out, early days, an S&P 500 product that has a good annualized distribution that could be in the most tax efficient manner to get that net after tax distribution as close to the gross. And we want to capture as much of the upside of the underlying as we can. We want to capture as much of the S&P 500 or the NASDAQ 100. And we want to make sure that over time, that the total return can support whatever distribution we're putting out. Yes, there's going to be down years when the market has a tough time. And during those times, you're going to be making more money on the option portfolio than you are on the underlying equities. So we want to make sure that over time that those total returns can support the distributions. And that's kind of a real goal of ours. We want to have that price appreciation with the nice distribution that you're getting on a monthly basis.
I know that you answered this, but let's go ahead and answer this for everybody up front. You have 6 funds in following right now with the SEC, and the SEC being on strike. You're not able to launch, or you don't want to launch, just in fear of somebody coming back and make comments. So is there any update on the MLP fund or all the funds? So everybody can hear it one last time.
Sure. So just to kind of go through it again, yes, we have 6 funds in registration, one of them being the MLP and energy infrastructure. And with the government shutdown, SEC's, pens down right now. And so we can't launch anything because we haven't received the comments back, if there are any comments from the SEC. So we're of the mindset to just wait until they get back to work and catch up on their work and provide any comments that they may deem necessary, and move forward at that point. So for now, we're just in a waiting pattern until they can hopefully get back to work and start up their process again.
What's the target dividend of NIHI, please?
The target range is in that 8 to 10% range for NIHI. So we're excited about that one. That one's been really exciting to get out. We've had a nice, asset raise early on, and we're looking to continue to grow it. And that space is very large, as you know, the international space. We're looking at what we're holding underneath. We're holding IEFA, which is basically the investable market outside the US, and it does not include the US or Canada. And so it gives you really nice access to a lot of names in different countries that you would not normally think to invest in, and get that exposure.
We're just going to try to go down as many questions as we can. I know we have a hard stop coming up, but let's go ahead. On buffer fund or barrier or buffer funds, whatever Simplify does, NEOS can do it better. So you got big kudos. So any thoughts on buffer or to find it?
We're not in the space yet. It doesn't mean we won't down the road, but right now we're still trying to just cut up that asset allocation pie. I think the next 6 ETFs that we just mentioned really do that. And then, some of the other ones that we'll get out probably in the alt space or different equity type funds early in 26, hopefully we'll really continue to do that. But we're not looking currently at the, call it buffered or defined outcome space right now.
Clinton, how about a DXY fund or an inverse? I don't even know. I'm going to leave that one to you. Answer.
No, we've thought about it. It's, again, when we think about what people are asking for, we talk to obviously a lot of advisors on a daily basis that allocate to our funds and what their clients are looking for. We do have a long list of products that may or may not work. And then as we're thinking about those and starting to maybe do some testing and looking at the option strategies and how deep the liquidity is in the option market around some of the underlying reference assets, we sort of slide things to the front of the list if they're more in demand, like the Ethereum, for example. We wanted to try to get that one out. So that's kind of next on our list.
I just followed QQQI guy. So he's out on X. Any fear or concern if you're a step out on too many fringe style investments like Solana that could dilute your brand or reputation?
No, it's a good question, and I think one, I like the QQQI guy handle. That's a that's a great one, but I think that's why we've stuck with really stuck with partnering with a lot of large index providers. And I think for us, it makes a lot of sense because I'm not going to sit here and pick specific equities or pick specific real estate fund, ETFs or individual companies. I want to partner with a large index provider and, go to a place that you understand QQQI, you like the NASDAQ 100, you want to invest in the NASDAQ 100, but you want income on it. And so for us, it made a lot of sense to partner with NASDAQ and have that relationship with them. We've been partnered with them on and off for a number of years, over a decade, because some of the early funds we brought out over a decade ago, the original was a NASDAQ 100 fund. So we've known them for a long time. But yes, that's why when people ask, oh, can you do this next coin or this next one that's going to have an ETF on it? NEOS has been in the space for a little over 3 years, and we have 13 ETFs out. We could have probably had 25 or 30 ETFs out if we wanted to, but we wanted to selectively bring out what made sense at the right time. And we were trying not to throw stuff at the wall and see what sticks. We were trying to really just bring out thoughtful products that we could support and we felt like would be the next version of something people would look for, people would like to get access to, and people would want to potentially invest in and earn income off of it.
I fully appreciate that. I think you do have a really good reputation out there, and I know you back tested. I asked that question because I know you already do. But here's a good one, and maybe you can answer this. Can you go into more depth on how the cover calls will work on boosted funds and what percentage could you write on and how far out of the money, etc.? I know that's a lot to handle, but can you at least go into some of it that you feel comfortable talking about?
Sure, I could tell you what's in the prospectus and kind of how we're looking to manage it. So if you think about, we'll do the S&P 500 version. So it'll look very similar to SPYI, where you're long all 500 plus names, and you have these 2 calls, index calls, that we're rolling on a monthly basis, and that's SPYI. What gets you the boosted version is we'll build a synthetic long position, so a put call combo where you're buying a call, selling a put, same expiry, same duration. So same expiry, same strike price, which will give you a delta 1 position to the S&P 500. So we'll do it on the index options, and that'll give you the added leverage. And the goal is to get up to potentially, a 1.5 turn. So a 50% leverage on the underlying portfolio. So you get 1.5. And then we would write calls on top of that as well. So if SPYI is 75% covered, that levered portion could be up to potentially 75% covered as well. And that'll, the goal is to get you the added income on top of the added leverage. So do you get more in an up market, more of closer returns to, say, the underlying S&P 500 is kind of how it was built.
Yeah, that's actually how I perceived it. Because if it's 1.5 and you're getting about 80% now on upside, right, you could actually match or beat SPY in an up market, but may not want to hold it in a down market, depending on your risk tolerance.
Yeah, if you're taking the leverage, yes, you're taking more equity risk, and so in the down market, you're going to underperform not only SPYI, which it's the leverage is on, but also potentially the S&P 500 itself. So, and then you're also starting out from a lower base when the market does turn. So it's something to think about. It's really for investors that like to take more risk and potentially get a higher distribution. But again, it's something you need to really think about, really read through the prospectus, understand what you're investing in any of these products, whether it's a NEOS product or a competitor product. Really, this space, Brad, you and I talk about it all the time. This space has grown so much over the past couple of years. There's over 700 ETFs that have options in them now. And that includes the defined outcome and the buffered, but over 700 funds. So when you're looking for income or looking to invest in a product with options, really spend the time, do your homework. You know, like Brad said earlier, you go to our website, you could look at all the tools and everything that we have on our website to understand what we're doing. You can pull up the holdings file on a nightly basis. And you can do that across competitors. So if you want to compare our fund to somebody else's, it's always good. Pull up the holdings file, see what's in there, look under the hood, and understand how it kind of works before you dive into it.
Or you can follow me because I draw out your options every single month, and I at least do one video during the month, showing these are where the strike prices are right after the first. That way I feel really comfortable with your actual strikes because I can literally go to TradingView and see where you are because you're right up against a couple of them, but not on Bitcoin. We'll say you're still out on Bitcoin, but anybody can do that. I mean, I just do it because I want to feel comfortable with your funds. But the comment was, is this the golden age for income investors? And I want to say yes. Opinion?
Listen, yes, I think if you think about how many different income products there are out there, we just over 700 ETFs, but not all of them are income focused, but a lot of them are. And so I think it gives people, pun intended, more options out there to figure out what makes sense for their portfolio. And it's different for everybody. Everybody has different income needs. Everybody has different risk exposure. Everybody has a different risk tolerance. And depending on what your lifestyle is or what you're trying to supplement or what you're trying to get out of your portfolio, there's probably a solution out there for you. Maybe one of them's a NEOS product. Maybe one of them's another competitor's product. But I think there is more income products out there. And I think a lot of people really, have to do their homework and understand what's going on. And I think as you start to educate yourself, you'll see what products are out there, what makes sense for you, what makes sense for, somebody else might not make sense for you. So it's always good to just spend your time and think about it as you're starting to invest in these types of products or any product, period.
Exactly. I fully agree with you. And there's so much out there. I'll never run out of a job. I'll just throw that out. Let's try to, I hate to say this, we're going to try to cherry pick some comments because we're going to definitely be up against the time schedule here. All right. Let's go back up here. Oh, taxes. That's a great question. Question, please do not ignore if already addressed, as I wanted to rewatch, but MLP fund will be taxed, no K1 assumed. I can actually answer that if you read the prospectus, but go ahead and answer that question, Troy.
Correct.
How is the tax going to be?
No K1, so it will be an ETF where you will get a 1099 and it'll kind of break it down like your other ETFs, whether part of it is returning capital, long-term, short-term, qualified dividends, etc.
Very good. Now you can actually read that. That's actually in the prospectus. Where can I get that awesome NEOS mug?
It is.
Throw that out.
Yeah, no, it is pretty good. So I don't know if we're offering them out yet, but I could find out from our marketing team if they're looking to get any swag out there.
That's always a question that we have out there. Here's one I don't think we've ever asked. Will NEOS lower expense ratio later?
It's always something that we bring up. It comes up. So if you think about how the ETF structure is, you have an independent board that reviews your ETFs on a quarterly basis. And then on an annual basis, you're going to do, a kind of an analysis of where the fund's expense ratio is, where it is versus competitors versus the space. And so we talk about this at least on an annual basis with our board and kind of go through what that process looks like. And for us, we think, right now we're priced, we're definitely not on the low end of the range where, say, like JEPI is at 35 basis points or wherever it is, or one of the Goldman products. But we're definitely not on the high end of the range when you think about where SPY or QQQI at 68 basis points is. So we think we're in a good spot for us to be able to get product out, be able to run a business, but it's always a topic of conversation. But I don't think I'll ever get into a fee war with a JP Morgan or a BlackRock or any of the above, because that's just a losing battle. But if there's a point where it makes sense to lower the expense ratio a little, we'd certainly consider that. But over time, we're looking at it more for total return. We look at the total return of how these products perform and what the competitor landscape looks like, and where the risk is. You'll notice some of our fixed income has a lower expense ratio, say CSHI at a 38 basis points versus a BTCI up at 98 basis points. And it's really about what risk you're willing to take and what that means, of course, managing the portfolio, the cost to manage it.
That's right. There's a lot of things that go in there. And every time I talk to you, you have more employees.
Yes.
At least that's what it seems.
Yeah, no, we're up to just over 30. I believe we're at 32 employees now. So the firm has grown a lot. We're based in Connecticut, in Westport, Connecticut, and we've been excited to grow the business. Garrett and I, while this is our newest venture, we've been working together for almost 18 years straight. So we've had a long career of working through various businesses together. And, a lot of the partners that we have here, we've been working together 5, 10 plus years. So we're excited to bring on more people, whether that's in marketing and sales, distribution, research, trading. So it's always exciting to bring on new people and bring them into the NEOS family.
A couple more questions, and we're going to end our meeting because I know you're up against a hard stop. Does NEOS distribute 100% profit each month or hold back any for NAV increase? How does that look from your perspective, from an accounting point of view?
So we usually distribute all of the premium we receive from the selling of the calls. We're not distributing all the profit because a lot of times the market's moving higher and your profit's unrealized, say in the long equity portfolio. So we're distributing the actual premium received from the short calls on a monthly basis.
Sure. And I actually know that. That's actually how I'm able to predict.
Yeah, exactly.
Right? I can predict the percentage approximate that you're going to do because I can literally go through it, even though I know there's a roll cost, right? So there's a couple good ones here. Any cover call ETFs for the European investor in the future?
So we've looked into this, and there's certainly some ways to get into Europe, because I know it's difficult to buy our ETFs over there. So it's something we've been looking at. We don't have a definitive plan yet, but it's something we're definitely looking at as we expand the offering and try to get into more countries around the world.
You do have one in Brazil, correct?
So in Brazil, we have a partner down there that launches funds that are essentially more look like feeder funds to us, where they own SPYI or QQQI or BTCI. And so those funds are down there. I believe there's a total of 6 down there now that just own our funds as they get exposure. And the Brazilian market is starting to really grow in the ETF space. So it's been in a very quick expansion down there for the team.
And one last question.
I was just going to say, we also have some offered in Japan, but Japan is different. They could buy our ETFs, but they have to be registered over there. So as we get a request to say, hey, we'd love to be able to have SPYI, for example, we could register it over there, and then Japanese investors can invest directly into SPYI.
So there's a question, and I'm going to read the question, and I'm going to give you a little bit more because I heard something at the CBOE. Will there be a NEOS Mag 7? My part of my question is will there be a Mag 10? Because the CBOE is coming out with a index, possibly, on 10 stocks instead of 7 stocks.
No, I heard that probably from the same CBOE person that you talked to, that they're trying to build an index. Yeah, they're trying to build an index. And when you build an index, you try to get to 10 or more names so you could possibly get that 1256. It could be more what's considered a diversified index. And so they're looking at building a mag 7 plus 3, 4, depending on how it comes out at the end. So it would be certainly something we would look at if the index had a nice options market around it. And I'm sure, giving those 7 names, I'm sure the liquidity would be enough to get things going. So it's something we'll definitely look at as that space grows. But we're definitely close with the CBOE. We obviously trade for Bitcoin. We trade the SIBO Bitcoin ETF index options. And I think we were one of the very first or early adopters to trading those in our fund in BTCI. So we know them well, and they're always trying to innovate and expand what they're doing on their side.
Yeah, exactly. Any closing comments for the audience?
Oh, listen, this was great. Thank you, Brad. Thank you for everybody for tuning in. Appreciate all the questions, all the support. And just if you, I guess, back to those earlier questions, is there a way to follow things? I guess maybe X is a good spot to follow us on, or check our website, neosfunds.com, when you can. And we always are putting out updates, and of course you could always go in and dig into the portfolios on there. But really, thank you for the support. I know, Brad, we've had a number of conversations and interviews, and it's always great to come on.
Really appreciate you, Troy. Have a great evening. It's turned dark out in the back, so I know that it is time for you to call today.
Thank you.
All right. Take care.